GitLab Inc., ticker GTLB, is trading live on the NASDAQ at $46.29, and it is almost perfectly flat, up just 10 cents or 0.22% as we approach 10 a.m. Eastern Time on this November 11th. And that, right there, is the entire story in a single data point. The expectation for a company that is supposed to be at the absolute white-hot center of software development, artificial intelligence, and the entire cloud-native build-out is for volatility. It's for big, decisive moves. The reality is this $46 stock, which has been cut by more than half from its all-time highs, is just sitting there. This isn't the calm before a storm. It's the paralysis of a market that is utterly and completely divided. It's a sign of profound indecision, a tug of war where neither the bulls nor the bears have an ounce of conviction. And that lack of conviction is, in many ways, more terrifying for investors than a sharp drop. We are watching a high-growth story stall out in real time, and the market is whispering that the company's biggest promises might be colliding with a brutal new economic and competitive environment. Let's establish the common ground, the narrative that so many investors bought into. When GTLB went public, the story was electric. This was the all-in-one DevOps platform. For anyone who isn't a software engineer, that means it provides a single, unified application for the entire process of building, testing, and deploying software. In the old days, a company might have one tool for source code, like a Fidelity managing its ledgers, another for testing, another for security scanning, and another for pushing the code live. GitLab's promise was to replace that entire, messy, expensive tool chain with one beautiful, integrated system. It was a picks and shovels play on every single company becoming a software company. It had a massive, loyal, open-source community, a clear subscription model to move users from free to paid tiers, and it was growing at a blistering pace. For an investor doing self-investing on a SoFi Invest or Robinhood platform, this looked like a chance to get in on the ground floor of a company that could, one day, be as essential as NVIDIA stock is to AI or Apple stock is to consumer hardware. The expectation was set. GitLab was the future of software creation. Now, let's challenge that expectation with the reality of this $46 price tag. This stock has a 52-week high of over $70. Its all-time high, in the speculative frenzy of late 2021, was over $130. Today, it trades at $46. Why? The reality is that the post-pandemic, growth-at-all-costs software bubble has burst. Corporate chief financial officers are now scrutinizing every single subscription, and the DevOps tax is one of the first things they're looking to cut. GitLab's revenue growth, while still good in absolute terms, has been decelerating. In the world of high-growth software investing, deceleration is the poison pill. It's the first sign that the total addressable market might not be as large or as easy to capture as the bulls believe. And then there is the elephant in the room, an elephant named Microsoft. GitLab's primary competitor is GitHub, which is owned by Microsoft. This is a brutal existential threat. Microsoft is not just competing, it is bundling GitHub's premium features, especially its AI-powered Copilot coding assistant, with its other must-have enterprise products like Azure Cloud Services. This is a competitive pressure that a standalone company like GitLab, despite its excellent product, will find almost impossible to fight on price. This isn't a fair fight. It's an all-in-one platform versus an all-in-one empire. Let's look at the recent stock movement because it tells this story of indecision perfectly. This $46 level isn't new. The stock has been chopping sideways, stuck in a range for months. The last earnings report was a perfect example of this paralysis. The company beat on revenue and earnings per share, which is what you'd want to see. The stock popped in after-hours trading, but then on the earnings call, management's guidance was just fine. It wasn't the kind of explosive, forward-looking guidance that justifies a high valuation. And so, the stock gave back all its gains and then some. This is a classic beat and lower scenario that has been crushing the SaaS, software as a service, sector. Professional traders using their interactive brokers platforms see this pattern and they short it, while long-term holders on Fidelity Investments just feel the pain. The volume on today's 0.22% move is paltry. Nobody wants to place a big bet. The bulls are afraid of Microsoft, and the bears are afraid of GitLab's still decent 30+% growth rate. This is what a stalemate looks like in stock chart form. So what does this company actually do? It's an open core business. The community edition is free and open source, which is brilliant. It gets millions of developers, from students in their dorms to engineers at startups, to use and love the platform. The investment thesis is that as these startups grow, or as large enterprises adopt it, they will need more advanced features. They'll need more security scanning, more compliance tools, and 24/7 support. To get those, they have to upgrade to the premium or ultimate paid tiers. This conversion from free to paid is the entire engine of the company. The problem, as we discussed, is that in a tight economy, good enough is the new perfect. Companies are staying on the free tier longer. They're resisting the upsell. That conversion engine is sputtering, and this is the bottleneck that management needs to solve. It's a fantastic platform, but the business model is facing a macroeconomic and competitive hurricane. This isn't a simple online investment where you just buy and hold. It's a bet on a very specific and very difficult sales execution against a titan. This brings us to the future and the central tension between expectation and reality. The bull case, the one that gets this stock back to $70, is all about AI. GitLab has its own AI offering called GitLab Duo. It's a suite of AI-powered features built directly into the platform. It can help write code, explain code, find bugs, and summarize issues. The bull expectation is that Duo is so good, so integrated, that it becomes the must-have feature that re-accelerates growth. It becomes the compelling reason for free users to finally upgrade. In this scenario, GitLab's all-in-one platform, now supercharged with its own AI, wins out because developers prefer a single, seamless experience over Microsoft's disjointed GitHub plus Azure plus everything else bundle. The company's growth kicks back into high gear, the path to profitability accelerates, and this $46 price looks like a historic bargain, a missed opportunity for those who left it out of their Fidelity IRA. Now the bear case, the bear reality, is that GitHub Copilot, backed by Microsoft's partnership with OpenAI, has already won. Copilot is the brand name. It has the mind share, and Microsoft is using its pricing and bundling power to make it a no-brainer for enterprises. This is infamy, is just a more expensive, less capable also-ran. The AI bet fails to move the needle. Meanwhile, the core business of CI/CD and source code management continues to face pricing pressure from Microsoft. Growth decelerates further, from 30% to 20%. Then to 15%. The stock is no longer a growth company. It's re-rated by Wall Street as a slow-growth niche software company. Its valuation multiple collapses, and the stock drifts down into the 30s or even the 20s. It becomes a value trap, a stock that looked cheap but was actually just on its way to being cheaper. This is the risk that keeps a Fidelity Wealth Management advisor from putting clients into it. This is not a stock for a passive Schwab Intelligent portfolio. It's a high-stakes bet that requires active monitoring. GitLab's big bet is that its all-in-one platform is better than Microsoft's best-of-breed GitHub plus Azure plus everything else. Comment below. Which ecosystem do you think wins the next 5 years? In the end, as we watch GitLab Inc. trade at $46.29, we are watching a company at a profound crossroads. This flat 10-cent move is the perfect symbol of the market's total uncertainty. The expectation is that of a disruptive AI-powered DevOps leader, the one platform to rule all of software development. The reality is a company with a great product, but with slowing growth, a questionable path to high-margin profitability, and a terrifying, all-powerful competitor in Microsoft. Buying GTLB stock today isn't like buying Tesla stock for the EV to robotics dream or NVIDIA stock for the AI chip monopoly. It's a much more nuanced and, frankly, more dangerous bet. It's a wager that all-in-one can truly beat an all-powerful empire. And at $46.29, the market is telling you it's a 50-50 coin flip and it's afraid to make the call. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional.